How are you doing today? And today we are going to talk about why only 5% of the Indians make 1 crore of net worth. And why is it that majority fails to reach this milestone? Well, let's first do the reality check. It is possible that the reason why people don't get to a milestone of 1 crore is because of impatience. Normally, it takes around 10 years for anyone to start seeing the results of law of compounding. For your first crore, it might take 10 years. For your second crore, 4 years. Third crore, 3 years. And if you want to make 9 to 10 crores, it could further take 10 more months after 3 years. This is a calculation for a 10-year period at 12% of CAGR. This is how you can make money. However, we do not make such amount of money. The reason is the mindset. People believe that money is all about getting it as it is, but that's not true. If you don't believe in making money, if you cannot think about money, you won't be able to make money. So having a mindset of making money, thinking about money is the first step for your mind to change. The second is to focus on system and not milestone. Why? Because once a system is built, the money start coming. It will flow automatically. The third is not to compare yourself with anyone. Normally people compare their journey with others without even thinking that every person has their own start. You have a start and the other person might have a different start of their life. So there is no point in comparing one person with the other. And the fourth mindset shift that we need to have is to balance wealth and life. Life is not about money. Not everything is money. You have health, mental peace, family, spirituality, and the nature to enjoy. And if you have a balanced life, you'll feel more worthy of living your life meaningfully. So, what are the core action areas that we need to think about once we talk about money? The first is to build skills, which will eventually build income and build assets. Now, this is something which we don't understand. Once we get a job, we keep on doing the same thing every day without even realizing that there are a lot of things which we can learn apart from what we are doing. That is, we can enhance our skills. The more skills we have, the more amount of money we can earn. The more amount of money we can earn, the more assets we can create. And eventually, these assets will make us wealthy. So, early in your career, you need to focus more towards your skill growth and not returns. The more income you will have, the more money you'll be able to save and invest, and your skills will compound faster than the capital which you want to accumulate in 20s. So it's better early in your career, invest as much as you can on your learning, learn new skills, develop yourself as a person who can make money through different ways. And once you're doing that, you'll be able to get a lot of good results. So early in the career, focus on skills. You should avoid trading because 90% of the people lose money in futures and options. Avoid speculation in trade market or stock market because the value that you earn will be lost in seconds. Try to resist and show off, make spending, which is as per your requirement. Have a disciplined saving and investment plan so that you maximize your goal. Well, in your career, it's better to avoid real estate, buying of real estate, because at the end, the income yield, the rental yield is quite less in India. And it's better to live on rent for the initial 10 to 20 years and accumulate large sum of money through law of compounding. And once you are able to set yourself in a family and you have a good corpus, you can buy a good and a big home. So buying of a home should not be the first priority of a youngster. Also, you can manage your credit smartly, use credit cards for benefits and that never carry you to avoid debt. And also, credit card brings you in a debt trap. So it's better to avoid credit card unless and until it is really an emergency. Then we have the long-term investing framework. Now, this involves financial assets such as equities, mutual funds, index funds, and these funds gives you 12 to 18% of returns. There are also non-financial assets such as gold and real estate, which are having good rate of return, especially gold these days. You need to keep it simple. Have a portfolio wherein you have a balanced amount of mutual fund stocks and real estate and gold. Stay invested for decades, 20, 30 years is something which will show you better returns. Do not stop your SIPs during market crashes because market crashes are the opportunities to put in more money so that you make better return. Also, you need to understand the law of compounding, which works on the principle of contribution time and compounding rate. So contribution, that is the amount which you're contributing in time, are only in your control. And once you have understood this phenomena of law of compounding, which is the eighth wonder of the world, you will never be stopped. Also, patience and discipline is equally important. Wealth requires boring repetition, such as uh, what Buffett said is the more boring it is, the more wealth it will create. So stick to your strategy instead of jumping into what is happening now or following the trend, because the trend might even reverse. Avoid constant checking of NAV, stock prices, share market, your portfolio. Once you have built an automated system, leave to that system. Let the money transferred to your SIPs automatically. So, what is this which will make you more patient, disciplined, and generate wealth? Wealth creation involves boring, repetitive tasks, as we have already discussed. Follow investment strategies without chasing trends. Have your own wisdom and your ability to think. Limit your portfolio review and maintain discipline through market volatility. Do not leave your portfolio. Do not try to sell when things are not going right. It will become better and you will have a good wealth. Now, if you are between 20 to 30s, what are the things you need to do as a youngster? Well, you need to avoid and focus on skill development and high saving rate. You need to start SIP with minimum 5,000 to 10,000 per month, even if you're having a less salary. Avoid house purchase and loan recommitments early on and build a formation for long form wealth accumulation. Similarly, if you are between the age bracket of 30 to 40, your focus should be to increase your income and allocate assets. You can scale the SIP amount from 10,000 to 50,000 to 1 lakh per month if possible. Delay home purchase until you have a strong purpose of 2 to 3 crores with you. Then comes the age 40 plus, which is the capital preservation and balance growth phase. You need to diversify more, that is, debt funds, international funds, etc. So, health will be always more important than your wealth. So, focus on your health as well. This is for the people who are in the age of 40s. So, I hope this video must have really helped you to gain an insight on how you can become a crorepati in India within the next 2 to 3 years if you start following these basic terminologies. Thank you.